Hello, I'm Patrick Linnell with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Origin, rancher-to-rancher genetics. Origin has a comprehensive lineup of calving-ease, performance-driven, and carcass-oriented AI sires. Progeny of several of these sires have sold on the Creekstone and U.S. premium beef quality grids and have graded 70% USDA prime. Visit originbeef.com for your ranch's genetics today. After a strong start to 2018, fed cattle profitability is on pace to average between a break-even to slightly in the red for the year on a cash-to-cash basis. In January through March, a strong fed cattle market set the cattle feeding segment firmly in the black as weekly cash prices exceeded estimated break-evens. As the market faltered in May and into the summer, fed cattle profitability began to slip. Through the remainder of the summer and early fall, fed cattle continued to lose money, with estimated losses around $100 per head. Now, as the year comes to a close, the gap between break-evens and selling prices is narrowing, with estimated margins between $0 and a $50 per head loss. This will put fed cattle margins averaging at around a $50 per head loss for the year, assuming that fed cattle are bought and sold at average cash market prices. However, an important factor to include is basis, or the difference between cash and futures prices. A strong basis environment was extremely favorable for hedgers for the first 8 months of the year, providing a nice boost to the bottom line for fed cattle that were hedged via futures or options. A strong basis, where cash prices exceed futures, is favorable to sellers of fed cattle that are hedged, as the hedger picks up the difference when lifting hedges. The added gain from basis will vary widely with risk management strategies, but basis gains could average upwards of $20 per head for the year as compared to a 10-year average basis. The end result is a fed cattle segment of the industry that was generally at a break-even to small profit for the year when accounting for the basis gains. In the short term, this will be positive for feeder cattle demand, as feed yards have not generally accumulated large losses this year. Looking into 2019, current futures market prices, as well as fundamental price forecasts, are indicating fed cattle prices that will trend near break-even levels. Whether the basis environment in the new year follows the strong basis pattern of this year, or if a weaker basis pattern emerges in 2019, will be an important factor in fed cattle profitability. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real. The volatility is extreme. The risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective. Our vision is global. Our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.